Good morning to the honorable judges, ladies and gentlemen. I'm here to introduce you to the Health University research team. I'm Siu Guan, and these are my teammates, Kelly, Jack, Casey, and Jington. Now let's start with Top Glove's company overview. Top Glove currently has 22% of the global glove market share. It's the world's largest glove maker. And with more than 1,000 customers spreading across 185 countries, they are one of the preferred OEM manufacturer. Top Glove's current product mix consists of 80% of natural rubber and 20% of synthetic rubber glove. In line with their expansion, they are in the process of upstream venturing, striving to achieve 50% of interchangeable production between natural rubber and synthetic rubber glove. Now let's move on to Top Glove's Porter's analysis. There are two important elements in the Porter's analysis, and which are bargaining power of supplier and competitive rivalry. Bargaining power of supplier is considered low, as latex price is a commodity. As such, changes in the latex price will affect all the suppliers similarly. Competitive rivalry is considered intense, as key players strive to expand their market share, especially in the nitrile glove, where it compromises profit margins. Now let's take a look at Top Glove's past performances. You can see that both revenue and net profit having an upward trend from year 2007 to 2010, whereas production costs, you can see an upward trend for all 5 years. Due to the weakening in US dollar and a hike in latex price in year 2010, you can see a sharp decreasing trend from year 2010 to 2011 for all three ROE, net margin, and EBITDA margin. So, ladies and gentlemen, is it a buy, hold, or sell? I shall invite Kelly to present with the recommendations.
Thank you, Siu Guan. Panelists and audience, let's continue with recommendations and valuation. We recommend a sell call to Top Glove share at target price of 3 ringgits and 3 cents with 42% upside. This target price is derived from Golden Growth EV over IC, which is fair equity value divided by total invested capital. Based on the assumption on the right-hand side, we derive implied EV over IC at 1.3 times, and it turns to us the target price of 3 ringgits and 3 cents. Golden Growth EV over IC is adopted because the enterprise value is more comprehensive in valuing company with low leverage. To illustrate, Top Glove has low leverage since most of the financing are from their cash balance. Furthermore, valuation method that consists of ROE may not be relevant because it will be understated company with high net asset like Top Glove. In addition, Golden Growth EV over IC is more precise for manufacturer firm with high tangible asset like Top Glove, and it does not include non-core operating investment income. We recommend a sell call to Top Glove share because we believe that it is overvalued. Why is it so? Let's take a look on PE. According to our forecast, Top Glove share is trading in the market at PE of 22.6 times, which is 71% higher than the implied PE of 13 times. The chart shows historical PE trends of Top Glove versus peer. The current PE is 140% higher than the peer average PE. Moving on to PB, in our forecasted year 2012, we foresee PB at 2.66 times, which is overvalued by 68% when the implied PB is only 1.6 times. As you can see from the chart, the historical PB trend seems to be higher than the competitors over the years. ROE-wise, we foresee ROE at 12%, which is still lower than the implied ROE of 15%. This shows that the effectiveness to gain profit by equity employed is lower in comparison. On the other hand, peers are able to offer higher ROE at 18.6% with similar risk exposure and lower share price. I would like to invite Jack for further explanation on forecast and our sensitivity analysis.
Thank you, Kelly. Here are some of the essential forecasts we made. We locked the US dollar exchange rate at 3.1 ringgit and the crude oil price at $100 per barrel for 3 consecutive forecasted years. Next, we assume latex price this year, 2012, at 6.5 ringgit per kilogram. That's about 26.9% lower than the previous year. Next, We foresee the capacity utilization rate in 2012 at 72%. That is slowly picks up again in the next 2 years. From our analysis, we identified that the latest price and crude oil price are negatively related to Top Glove's earnings, whereas US dollar exchange rate and production volume are positively related to the earnings. This table summarizes a 1% increase of Top Glove's main earnings drivers and the percentage change in the earnings. Next, this table conveys some of the most important forecasted figures. We expect revenue in 2012 to drop due to higher production volume but lower selling price. And then it picks up again in the next 2 years. However, net profit in 2012 is expected to grow by 17% higher, mainly due to lower latex costs. As net profit recovers for these 3 years, Top Glove's ROE increases steadily as well. Ladies and gentlemen, please take a look at this comparison table. You will find that Supermax and Cosa, as Top Glove main peers, are offering at a higher ROE and higher net profit. To add on that, as mentioned by Kelly, Top Glove's peers PE trading at much lower multiple than Top Glove. Next, allow me to invite my teammate Cochrane to explain on the key catalysts and the key risks that will affect Top Glove's earnings.
Thank you, Jack. Now I'd like to highlight the key catalysts that support our sell call. Firstly, as major glove makers are having expansion towards natural glove, the competition will be more intensified. Secondly, we believe that a minimum of 1 to 2 years are required to absorb the overcapacity of glove in the glove market due to overexpansion in year 2010. Thirdly, Top Glove may not be able to gain confidence while expanding into natural glove as it is not their expertise. Hence, Top Glove may fail to capture more market share from the natural glove sales. Next, failure in upstream venturing will decrease Top Glove's earnings due to the exposure of the volatility of natural latex price. Moving on to the investment risks that affect our target price. Appreciation of US dollar will increase Top Glove's earnings as their major revenues are denominated in US dollar. Also, it is possible that the sudden outbreak of sicknesses such as influenza A and bird flu will dry out Top Glove's earnings as well. Let's focus on the key risks that lead to lower production costs. Decrease in both latex and crude oil price will increase Top Glove's earnings as they account for 69% of Top Glove's total production costs. Since Top Glove is moving towards automation, their revenue will be driven up due to decrease in labor costs. Judges, ladies and gentlemen, although Top Glove has a strong company background, strong financial track record, and sound strategic plans, we still believe that Top Glove is overvalued as compared to its peers at its fair value of RM3.03. Besides, Top Glove has yet to overcome from the oversupply of glove and is anticipating stronger competition. Thank you. I would like to welcome questions from the judges.